Stock market trading is the practice of buying and selling stocks or shares of a company through a broker in order to make a profit. It's a form of investing, and it can be a great way to make money if you understand the ins and outs of the stock market. One of the most popular forms of stock trading is called day trading. Day trading is when investors buy and sell stocks multiple times throughout a single trading day. Day trading is a lot riskier than other forms of trading, but it can also provide the highest returns if done correctly. Another popular form of stock trading is swing trading. This type of trading involves holding onto stocks for a longer period of time, usually 1 to 2 weeks. Swing traders often attempt to take advantage of short-term price fluctuations in order to make a profit. In addition to day and swing trading, there is also long-term trading. Long-term trading is when investors buy stocks and keep them for a longer period of time, such as 1 to 5 years. Long-term trading is a much less risky form of trading, but it can also yield much lower returns. Lastly, there is margin trading. Margin trading is when investors take out loans from their broker in order to buy more stock than they can normally afford. This type of trading can be very risky, as the loans must be paid back even if the stock market crashes. Stock market trading can be a profitable activity, but it is important to understand the different types of trading before getting involved. Day trading is the riskiest, but it can also provide the highest returns, while long-term trading is a much less risky form of trading but can yield much lower returns. Always do your research before investing in the stock market so that you can make the best decision possible.